there are other times that you do something that's actually like quite like you should let people know, no, this is not normal. This is something quite special, right? And I think that's what we did with Netflix. So if you remember Netflix, it's been going down for like a month, every single day, nonstop. I think it was 650 all the way down to 512 where we bought it. We got in within 24 hours, made 40% on it. It went to 525 or whatever. We got out. Netflix is like at like 480 right now. No, we were at, it's at 380. Like it's really, really bad. And before we get to the market in terms of looking at stocks and stuff, what we said yesterday was in an effort to understand where we're going. And we said Netflix was going to tell us a lot. Now, if you remember at the beginning of the day, Netflix got up to 528 and started selling off. In fact, we got out of our position right away. And again, it was an automated sell, right? Everyone knew that. We were out of our position before we even came on. And we said, wow, it looks like people want to sell Netflix. But we said, I keep saying we said, right? But what we illustrated was that when you have a large position that you need to get out of, you can only sell it when you have the opportunity to, not when you want to, right? Because if you have such a large position you want to get out of and you're selling more than there's people that buy, you bring the price down and you hurt the value of your position. Therefore, you can only sell when you can sell until you have no choice and you have to just liquidate, right? So there's something called selling. All right, I want to sell this stock. Then there's something called, I can only sell when it's a good time to sell, right? Okay, I want to sell this, but I have 1 million shares, and if I sell 1 million, I'm going to tank the stock. I got to wait for my opportunity to sell. Then there's something called forced selling, where it does not matter anymore. You have to sell the stock. It does not matter, and you destroy it. And because you destroy it, you destroy other people's positions, and then they get destroyed, and they sell the stock, and that's called liquidation, which leads to capitulation. Now, how can you measure capitulation? Well, actually, on our algorithm, we do measure it. Now, you haven't seen it yet, but there are green lines. They're called trend change bars. Those green lines are measured by that the volume is 2.5 times the rolling moving average volume for the previous 21 sessions. It's hard to spit that out sometimes because, again, I coded it, right? So, like, I know what it is. Now, in my experiences, when the volume is inordinately that high, it means it's getting close to capitulation. Like everyone did something. Now, when a stock comes down on really high volume, what does that say? Well, it says a lot of people sold it, but a lot of people bought it. Now, when the volume is super duper duper high, what does that tell you about the stock price at that moment? That, yeah, that many people are out of the stock. They are out. They hate it. They're out. They wish it dies. But it also tells you that many people already know all the bad news. It tells you that that many people are saying, okay, we get it. SHIT, this is not good. But we already know that, and we think this is a good opportunity. Which means one of two things. Well, actually means two things. One, this is a shareholder base that is looking for the stock to go up, right? Because they just bought it. So they'll tolerate it going down a little bit because they already know the bad news. They're already said, okay, I know the bad news. I want to be in because I think this is a good opportunity. But the second thing is they're very trigger happy. They know that they're buying a falling knife. They know that they're buying something that just came down 100 points, which means they're taking an opportunity. They have no skin in the game. It's not like they've been dating you for a month. No, they're just sleeping with you tonight. Now, maybe it's going to be a great relationship, but it's starting off with just, intimate time together, right? They're buying the stock. They consummated the relationship. But it's not like they've been with you. If that stock goes down 2 or 3 or 4 points, they're gonna say, all right, I got it at the wrong price. See you later, sell it. Because they don't have any skin in the game. They were never in it. They don't care about it. They were in it for one reason, to get a good price. If that price is not good, then a disciplined person would say, okay, I failed at that, I'm out. It's only when a person purchases a stock, is in it for a little while, purchases a little more, in it for a little while, that's now somebody that's been equivalent to married to you, right? Like they're gonna endure the good times and the bad times. Unfortunately, when you see such large volume selling, that's a lot of people that are divorcing you, which means now you're single and now you're going on a lot of Tinder dates, right? Hopefully one works out, but we don't know. So when a price gets hammered to that point, it tells us a couple of things. One, there's a lot of fluff in the market. There's a lot of stock that still needs to be sold. Two, that opportunities are starting to arise. People are now seeing obvious points where it's like, okay, let me see if I could just dip my toe in here. Because once someone dips their toe in, like say something comes from $10 to $5 and everyone sold it and everyone bought it, right? So now you have a new shareholder base at $5. If that thing goes up to $5.50, you know what the people do that bought at $5? They buy more because now they're more confident in the stock. See, you might say, and if they own it at $5, why would they buy it at $5.50? That's paying a higher price than they already own it at. No, they own a stock that they're uncertain of at $5. What is a stock that they are more certain of worth? It's worth more than $5 to them because they have a higher level of certainty. So then they start buying it on the way up because the belief is it should never have gotten to 5. They believe it's still worth 10. So they'll buy it at 5, 5.25, 5.50, 5.75. And that's what builds a base that a stock will then take off on. And so, Anthony, yeah, that's a great story, but like, how can you prove that? Well, like I said, when it comes to stocks, we all playing the same game. We all see the same screen. We all see the same charts. So we all have a certain consensus that we all know together, right? So if I look at a chart that exhibits those characteristics, I see something that the consensus also sees, because we all have like unspokenly agreed to it together. And as a result, it becomes a self-fulfilling prophecy, right? Like say, for instance, you were told since a young boy or young girl that every morning at 10 o'clock, your stomach rumbles and you have to drink a little milk, otherwise you won't grow tall, right? Or no, otherwise you'll be hungry the rest of the day. Well, you do it and you do it and you do it. The point is the repetitivity of that behavior means that if you don't do it at 10 a.m., you might then feel hungry you might feel hungry because you didn't do it at 10. And even though it had nothing to do with your digestive system, it had to do with your mental makeup. This was what you were nurtured to believe. Therefore, it's a self-fulfilling prophecy. If I miss that 10 a.m. milk, I'm going to be hungry. And I know that because I've been told that and I believe it. Therefore, it's true. And if I believe that and everyone believes it, then it is fact, right? It's like, I'm not going to get into politics, but anyway. So that's how we have to look at that. So we're going to take a look at the market today with a different lens, with a lens of, wow, hey, we did really good yesterday. We got in and out at the perfect time. Woo-hoo, right? But now it's down even more. Is this market, which Netflix has showed us, is that there are large positions, there's large landmines places that people are just getting blown up in. Now, let's go back to what I just said. Liquidation precedes capitulation. Capitulation is when there's no more selling. All the selling happened because everyone's vomiting it. Everyone's being liquidated. They have to sell the stock because it came down so far that they're getting margin calls and their whole portfolio is upside down. And that pain inside them is like, oh my God, I can't take this no more. Sell. When that's over, there's no more selling. When that's over, all those people that were picking the bones, I'll buy a 5, I'll buy a 5.25. When they see an all clear sign, they say, okay, bring in the trucks. Let's go. This is the time. And that's the capitulation that leads to the higher point. We are getting closer to that. Now, whether that lasts a long time, I have no idea, but we're getting very close to that. So let's take a look at our stocks. Let's take a look at our algorithms. Let's see what's out there. I don't know what's out there. I don't even know what the stock market is right now, right? Like, let's see what's going on. Our Netflix worked out really well because we knew they had earnings. We knew that there was a catalyst event that regardless, it was going to get a pop amongst the suckers at the early morning, right? Well, conversely, you're seeing the suckers right now. The last time I saw the stock, it was 390, right? There's a lot of people selling it right now. It could very well end up over 400, 410, 450 by the end of the day. Who knows? I don't know. It could end up under 200. I have no clue. But I can tell you that there's 3 companies that I like that are reporting earnings next week, and you know them. Microsoft reports Tuesday after the bell. Tesla reports Wednesday after the bell. Apple reports Thursday after the bell. What do these 3 companies have in common? They are 3 of the largest I think 3 of the largest 5 or 6 tech companies in the entire world, which means if you believe that these tech companies were a couple of things. One, all the bad news was already out. The market's gotten annihilated. All the stocks got annihilated. How much more bad news can there be? If you believe we're getting close to capitulation, then even if these companies come out with bad news like everyone's expecting them to, the people that own the stock already expect the bad news, right? Because every company is showing bad news and because the stock is going down accordingly, everyone buying those companies already knows the bad news and they're buying it with the bad news. Therefore, the stocks will stop going down on the bad news because the buyers already know the bad news. Capitulation. 2, God forbid they have good news. If a stock is not going down on bad news, then what is it going to do on good news? It's going to fly. Thirdly, is the market ready to have a near-term bottom again? Did we get to capitulation across the board? If those 3 things are the case, then we want to own the largest tech companies. We want to own the Nasdaq 100, right? The QQQs, in which case maybe we get fancy and buy a particular stock. Maybe we just own the index. I don't actually know. Maybe we just buy Apple, right? Like Apple is a good company. Everyone loves Apple. No matter what happens, people are going to buy Apple. So I think that's what we're going to do. Let's buy Apple for next week, and we're going to sell it before Apple reports earnings. Because even if Microsoft numbers are bad, people will say, well, that's Microsoft. I mean, it's not Apple. So Apple must be doing good. That's why Microsoft's doing bad. They're taking their customers. I think we're set up that if we own Apple calls, we're going to be very happy. But I'm saying that having no clue where the stock is. I don't know if people already thought this before me. So let's pull up our sleeves, get our hands dirty, and let's see what's going on in the market. Okay. All right. This is my account. We don't need to look at that. All right. Let's move some stuff over. Why is this doing this to me? Okay. So this is Microsoft. It's at a 6 red and green. They report, and look, it's towards the lows of the day. Well, okay, first of all, let's start and see where the market is, right? Like what's going on. The Dow's down 180, the Nasdaq's down 230, the VIX is up 243, it's at 28. All right, so we need to get our hands dirty and do some stuff. All right, let's pull up the QQQs. This is the Nasdaq Index. Let's pull up the volatility because we need to know what the hell's going on. Okay. The Nasdaq is at a 6 red and green as an index. Okay. Let's see. So volume was going up again yesterday. 3 days in a row went up with the price going down, volume going up, volatility going up. That's what we call really bad. Right? Really bad. Okay. What's it doing today? It's going down again. It's going to be a Friday, so this volume is going to be lower than this day, but it's because it's a Friday. Now, here's another thing I want to talk about for a second. And this is more of a long-term opportunity that you can take advantage of right now. So this has been something that's been bothering me for quite some time. So yesterday in the middle of the day, there was so Congress in their infinite wisdom is finally wising up to big tech monopolies. So because this administration is so garbage, they need to find something. So they're going after the tech companies now. All right, everyone in America, you're having a hard time because the tech monopolies. Now, sitting there with my wife watching TV, and we're like, I think they watch Rhino because they're saying now what we're saying, which is fine. Like, we're looking to save the world. So if Congress started watching Rhino, which I kind of think I know they are, cool, right? No big deal. They're going to watch Rhino plenty more times because I'm going around the whole country this year. That's fine. That being said, that bill that's going to break up tech monopolies has advanced out of committee. Now it's going to be put together by the Senate and come to the Senate floor. That's the next step. So when that happened, tech started selling off because think about it. If you own a monopoly and now your company is no longer allowed to be a monopoly, well, then the value of your company goes down. Because if I'm a monopoly, well, I have no problem making money. I monopolize the market. But if I'm no longer a monopoly, now I got to compete, which means that my revenues and my market share should go down. Okay. Here's the other part that they don't tell you, though. How do you go ahead and break up a monopoly? right? Like you have to break it up. So Facebook's a monopoly, right? Okay. What would you do to break up Facebook? Okay. So Facebook would be here, Instagram would be here, WhatsApp would be there, Meta would be over here, Oculus would be over there. Let me ask you something. Do you think the stock of Facebook would be higher or lower if instead of one share of Facebook, you had one share of Facebook, Instagram, WhatsApp, Oculus, and Meta? So for your one share, you got 5 shares of all these different businesses. Do you think that cumulative price of those 5 shares would be more than your one share of Facebook today? Yeah, it would. What about Google? What if instead of owning Google, you got Gmail, Search, and YouTube, all 3 different stocks? So instead of owning one share of Google, now you own a share of Gmail, you own a share of Search, and you own a share of YouTube. Would you like that? I think you would. Amazon. Amazon is the biggest web service company in the world. They have all the servers in the world. They have the biggest server company. What if instead of owning Amazon, you owned Amazon Marketplace, Amazon Prime memberships, and Amazon Web Services? Instead of one share, you got 3 shares. Wow, that'd be worth way more than one share of Amazon. Imagine Apple. You break up Apple. Now you have an iPhone company. You have a Marketplace company. You have all these different little companies. Oh wow. The point is, if you decide to break up tech, each one of those stocks will go through the roof, because if you go ahead and break up the companies within them, each one of those companies are so valuable that cumulatively they're worth more than the share of the stock to begin with. So if tech is going to get super scared and go down because, oh my God, the government might break them up, that's not a bad thing. That's actually a knee-jerk thing. That's one of those things that if you don't know how to put 2 thoughts together, you just take someone's word for it. But when you have a brain and a calculator, you're like, oh my God, break up Google. You're telling me I can own YouTube, Gmail, and Google? Break up Facebook. You're telling me I can have a share of Instagram, WhatsApp, Meta, Facebook, Oculus? Break up Amazon. You're telling me I can have web services, I can have Amazon Retail, I can have Prime membership, I can have rocket ships? Break up Apple. You're telling me I can have the iPhone and the iMarketplace, and I can have all these different companies for free? So instead of one of this, I own 5 of these? Do it. I dare you. That'd be pretty cool. So we think there's a natural floor to tech. So if we think there's a natural floor to tech, and we also believe that they're never going to raise a rate, never, ever, ever. Now the Fed meets next week, which we believe is going to be them coming out saying, all right, well, you know something, you better watch what you're doing. We don't think they're ever going to raise. So if they don't raise rates, and if tech came to a bottom, and if they still, and the reason why I talked about the whole breakup thing is because I gotta believe, now again, put your human behavioral science hat on, right? The market got slammed all week. So what happens on the weekend? People then go ahead and lick their wounds and try to figure out what's gonna happen the following week. Well, that's a really big business. It's called Barron's, it's called Wall Street Journal, it's called the Motley Fool. You have newsletters that go ahead and have opinion pieces of people who are then going to write an article to allow you to feel comfortable and to believe their opinion. And if their opinion is correct, you're going to be a subscriber to them because you're going to say, this guy's pretty smart. The point is, if I know this about big tech and I see an opportunity where tech is down, it really should actually be much higher. And this whole thing that people are freaking out about, them being broken up, is actually a good thing. Is that worth an opinion piece over the weekend? I think so. My point is, if that opinion piece came out over the weekend and the market started up because it was a little bit relieved Monday, is it conceivable that CNBC would spend all day talking about, actually, let's really rethink about this. If these companies had to get broken up, would it be bad for shareholders? And then all these people come out, no, I did the sum of parts and blah, 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 blah. The point is, when you have a market that has liquidation into capitulation, any news is good news because bad news is already priced in. People already know the news is bad. That's why they're sold the stock already, which means if bad news is no longer bad, that means good news is super duper duper, right? That being said, we're comfortable owning tech and we're going to dip our toe in and buy some tech today. I think we're going to buy Apple, but we're going to have to look at the charts, and that's what we're going to do right now. We're only going to use half our money because if we're wrong, we're going to put the other half on Monday. All right, so let's see where we're at. Whew. All right, so this is a chart of tech, right? Okay. So as you can see, it went up a lot and now it went down a lot. Like that's really not good. It's at the lows of the day. It's a 6 red and green, which really isn't a high number. Like we don't like 6 red and greens, right? Look at Netflix, 380. Blah. That is gross. But I gotta tell you, it's a 17 red and green, right? Like, do you think over the weekend somebody might come out with an article of, wow, Netflix got really beat up. It shouldn't have. This is why I want to own it. If you put a gun to my head right now and said, Ant, buy or sell Netflix, I'm buying it. Now, do I have to buy it? Not really. Like, I don't really care to buy it. Wait, there is a stock that I was looking at. Where is it? NVIDIA. Let's move this up. Because we're going to, now here's also another thing. I want to own like 10 different stocks right now. But I'm not. I'm going to buy one. Because when you do too many things, it's stupid. Come on, what number is, okay, so NVIDIA is a 7. All right, that's not enough. Microsoft is what? It's a 6. Now let's take a look at Apple. Apple was just recently 182. It's come all the way down here. So let's take a look at the volumes, though, of the individual stocks. So as you can see yesterday, the volume of Apple actually went lower. It went down on lower volume. Now, actually, Apple has, oh, you want to feel sexy today? Apple has its own volatility. So we can see. All right, so this is volatility of Apple. So Apple is down, right? Apple volume is sideways. Apple volatility is up. Which means people are still panicked, but there's less people panicking because it's Apple. Apple reports earnings Thursday after the bell. Let's just confirm that. Apple earnings announcement, right? You know what? Thursday, January 27th, right? Okay, so that's a week from yesterday. So let's take a look at Apple, right? You know, E-Trade, how about I take you and throw you out a window? All right. Now, Apple reports next week, so we're going to kind of be a little sexy here. We're going to buy next week options. Apple's 163 now. Look at these 165s. I mean, how do you not own them? Oh my God. You know what? We're going to own the one. No, you know what? Let's not be stupid. Let's own the 165s. All right. Okay. Half our money is 12,000. So let's buy to open. Let's put a limit price at 3.95. There you go. Give me the stock. All right. So we are the buyer of Apple, 30 at 395. All right. So we'll see what happens, right? All right. So let's go ahead and minimize this. Where's my chat? We don't need to see all that stuff. Where's my chat? Come on. Oh, there it is. Okay. So let's go ahead and say what we just did. So we just purchased 30 Apple January 28th, 165 calls. Okay. Oh, at $3.95. Now, what do we need to do? Remember, immediately, always do this. Go into your account. Oh, wow, we're at $500. That's pretty cool. Go into your account and go to close. And what do we want to sell it at? We want to make 40%, right? So 3.95 times 1.4 is $5.53. So we want to limit it to $5.50. Good for 60 days. Preview order. Place order, right? So now we have an order. Did I do that correctly? I did, right? To sell at $5.50. Cool. And maybe it happens, maybe it doesn't. We'll see when it happens, right? Maybe it happens today, who knows? Okay, but what we have identified was that, or at least what we believe is that the market is a bit overdone right now. Now, again, the beauty is we allowed all the suckers to spend the first hour by themselves. It's now 10:30. Let's go take a look at the suckers, right? They're always fun to look at. Where are the suckers? Okay. So when did the market open? This is the market opening here, right? Look at all these suckers. Oh my God, oh my God, oh my God, I'm gonna buy it, it keeps going down, I'm gonna buy more, I'm gonna buy. Now the hour is over, all of a sudden the buys come in because everyone's like, the suckers are done, suckers. In fact, I bet you Netflix is moving higher. Look. What time is this? 10:10, 10:15, 10:10, 10:25. Whoop, it's making now. Before I go ahead and paint the whole day with that, come on. Now it needs to hold though, right? Like it can't just, like this is also an opportunity that maybe it holds, maybe it doesn't. Maybe the market says, okay, you got a bit of a rebound, but now we're going to sell even more. Maybe this is a calm before the next wave of selling. So I don't really know. So let's go take a look at sectors, right? Actually, let's look at crypto first, because I heard a rumor that crypto's getting beat up today. All right. So Bitcoin is at a 6, red, no green. So it looks like it still has more room. Give me some red and greens here. Ethereum, I really would like to own. Ooh, red and green. Six red and green for Ethereum. Now that's certainly not, like a 12 or 13 or something, but we like Ethereum. We want to own Ethereum. The metaverse and everything going forward is built on Ethereum. So we do want to own it. So for those that are into crypto, I can't say that this is a bottom for Ethereum, but I wouldn't say it's a bad time to start making some purchases. Ethereum 2,800, why not? Now it could go much lower, right? Like, so let's just put that out there. Anything could go much lower. Now this one's an interesting one. I actually own this personally at one point, this Matic. I wrote it from like $1.60 to $2.40. It seems like a lot of people like it. It is a red and green. What number is it? It's a 7, which is actually pretty good. So 7 red and green on that. Do I have any more red and greens? That's Ethereum again. So Bitcoin looks like it's vulnerable, but Ethereum looks like that's where the smart money's going. Money's buying Ethereum right now. I don't know what this company is, this Reef nonsense, but it's a 9 red and green. No, not Reef, Link. So we'll add that too. I know a couple people do like crypto, that's why I'm doing this. There's another 9 red and green, ICP. Again, these aren't 12s or 13s, but if you were looking for something, that's a 5. It's Ethereum again. What is this? Tezos is a 6. So I think that's, oh, what's this? Algo? It's a 7. XLM is a 7. That's Matic again. We already know that. All right. So that's that. Let's take a look at some sectors. Actually, let's take a look at our super duper list again. Is there anything we could get rid of? Etsy, look at that. 18 red and green, as low as 152 today. Netflix is coming back, but it did get to 386. Now it's 382. That's, again, Netflix is kind of ground zero today. If Netflix could recover back over 400, everyone's going to feel a lot better. Because everyone's watching Netflix right now, because the lower it goes, it's completely, the lower Netflix goes, it's telling people, hey, listen, there are some hedge funds out there. There's a lot of people that are losing a lot of money. Because if you're selling Netflix at 383, after it was just 530 yesterday, and their earnings were good, they beat earnings. They saw subscriber growth, and now the valuation is the best it's ever been. They're going to be cash flow positive. Ozark's coming out next week. They're putting price increases, and they did good. If you're still selling Netflix at 383, it's because you need the money or because you're scared. Either way, that is not a reason to sell the stock on fundamentals. Therefore, if the selling of Netflix is completely irrational, that matters because the market is human beings. If Netflix is telling us that the market needs to sell even irrationally, that's going to tell us, whoa, let's hold back a little bit. But if Netflix stops selling and starts going up, it tells us that the market has officially capitulated. Everyone that was selling irrationally is out of it for the moment. Now we can start trying to build a base. We can start trying to build a recovery. So watch Netflix today. The low on the day is 379.99. The high of the day is 405. If this stock at least holds where it is and starts getting into the 490s, the 390s, that would be very, very constructive for the overall market. All right. So these are all really good stocks. They're all getting beat up. And we went ahead and we purchased, again, Apple because it has a catalyst in front of it. Apple was only like a 3 red and green. It's not a high number, but we know the catalyst in front of it, right? This could get taken off. It doesn't have a number anymore. So we're just cleaning up our list now because it's at like 80 something. And we are never going to buy 80 stocks. Which, by the way, do you see the market getting annihilated? And do you see all these greens? That goes to tell you, like, our list works. Look at this. Does this look like a market that's down 200-300 right now? It doesn't. I like our list. It makes me happy. But let's continue cleaning it, right? You always got to scrub your list. Scrub it like it's your little baby's little baby, right? Like, all right. And I say that because I'm a dad and I change diapers now, and you got to make sure everything's clean. So there's some things you take extra caution with. You scrub it good. Crown Castle, that's no longer on the list. No longer on the list. And we're kicking them off the list because they no longer have a number, right? And you can say, well, Ant, you just bought Apple without a number. Yeah, but I bought it on a different set of circumstances. Get off the list. By the way, we have another 24 minutes left, and I'm not killing time now, but I could answer questions. So if somebody would like to shoot some questions at me, we could do that. All right. But anyway, yeah, I'm just cleaning the list, so I'm not doing something, right? So gold we like, we think, honestly, I would like to take a quarter of my net worth and just put it into gold coins this year. It's on the to-do list. Ooh, QLD. QLD is ultra Nasdaq. This is a trading tool that people use that if they believe the Nasdaq's going to go up, all of a sudden they buy this because it's leverage. So this is like leverage. This is Nasdaq times 2. Whatever the performance of Nasdaq is, this is going to replicate it times 2. Look at it. It's at the high of the day. TQQQQ is the Nasdaq times 3. Silver boil lion. Yeah, I would buy silver coins too. In fact, there's a coin shop by where I live that if you own quarters before 1964, I think it is, they're actually silver. So I go there and I think I'm going to buy a lot of just silver quarters because it's silver. And I don't want to pay a premium for scarcity, right? Like I'm not looking for the super duper $10 gold piece from like that year with that president. I just want the metal. So I will probably buy, silver quarters. But I do think it's important to own some gold too. But anyway, this is 3 times in Nasdaq, and look, it's getting towards the highs of the day. In fact, it came all the way down and it's moving back up. What does that mean? Well, we've passed the sucker hour, but that doesn't mean that there aren't suckers born at 10:30 and 11 o'clock as well. It doesn't mean at the end of the day, everyone's like, okay, haha, selling everything off. But it also doesn't mean at the end of the day, people aren't like, oh shit, let's buy everything before this weekend. Because you gotta remember, the market opens Monday based on all of the media that's disseminated over the weekend. So let's put our hats on, right? If you were a editor for Barron's or Wall Street Journal or Motley Fool or Yahoo Finance or Google Finance, you are now faced with the challenge that you have to write your commentary of the market in terms of retelling what happened last week and offering an opinion that you will be held to because people read it and you need to be right more times than not of what's to come the next week. All right. Well, the market's been down 3 weeks in a row. In fact, Netflix just went down over 100 points for the first time in like 5 years. All of these really, really bad things happened. Okay. Apple, Tesla, Microsoft report earnings next week. Okay. The Federal Reserve, which everyone was scared of, comes out next week. Everyone already priced in the worst. Therefore, anything they do is better than worst. Apple and Microsoft, you could be sure that their companies are strong. Like, do we believe Apple all of a sudden is not doing good? No. Tesla is everyone's favorite stock. And Tesla is like kind of like the poster child. It's a 330 PE, price to earnings multiple. It's the most overvalued stock in like the entire market. But people love it. They're refusing to sell it. They're refusing to throw it out the window. And what is it now? Tesla is 972. Well, Ant, that sounds like they're throwing it out the window. Yeah, it was 1,200. It came down. But Tesla could be $100 stock and still have a high price to earnings multiple, right? So people are still sticking with it. Tesla, if they come out and say they went ahead and sold this many cars, do you think Elon Musk doesn't know how to get his stock up, right? So you have these things happening next week. And then you have the market went down because, big tech is in front of Congress and they might get broken up. Well, couldn't you make the argument that breakup would actually be good? It would unlock shareholder value, right? Like if Google is worth $10 as Google, but you could argue YouTube's worth like $6. You could argue Gmail's worth $3. You could argue search is worth $4. Well, 3 plus 4 is 7 plus 6 is 13. Well, 13 is higher than 10. So I can make an argument that breaking it up would actually give me a 30% gain. So if all of these big companies are getting slammed on the basis of something that's actually going to be beneficial for them, imagine being the author, the editor that came out and said that. Do you think people would agree with you? It would start a conversation. My point is, it is in my belief as a behavioral science background and experience in the market that I believe the commentary over this weekend is going to be super duper fearful. Look what happened last week. Oh my God, the world is coming to a close. But also at the same time, and now that all that happened, how much worse can it get? What more can happen? What more can happen in front of us? Because if I was in charge and someone trusted my opinion and I was in a position to say, do I think the market goes up or down next week, having the benefit of seeing where it just came from, I would say Nasdaq's down over 10% in like a month. Do I think it's going to go down 15, 20%? I don't. And if it does, do I think it's going to go down in a straight line? No, I think it might come up like 1% or 2%. Remember, you got to get the suckers back in. All right, it's down 10%. Well, the people that want to sell, do you think they want to sell at this price? No. So they say, okay, we sold most of our stock, but the market can't really take any more selling. So let's hold off. Let's let the market build back up. Let's let people get back in. and then let's offload it again to them. It happens in waves. It doesn't happen all at once unless it's a crash. Now, if you think you're going to walk into a crash Monday, I would say to you, if the market crashes Monday, I will take the other half of that money, buy the rest of my stock right there. Because a crash is by definition capitulation. There is no one left to sell. In fact, if you could buy at the bottom of a crash, you are the smartest person in the world. You know how hard that is? It's the hardest thing to do in the world because the bottom of a crash is when everything is the worst news possible. Did you buy when at the bottom of 2008? Did you buy at the bottom of 2020? No, in fact, most of you sold. You know why? Because it was so bad, it was so ugly. Just give me my money. That was the exact time you should have been buying, right? Frida, what is your take on PayPal? Is it going down every day? I don't know. Let's go check it out. All right. So my personal take on PayPal is that I hate it. I have PayPal. It's just a really clunky system to use. Whenever I try to go on PayPal, I have to press 1,000 buttons just to figure out where I'm trying to go. You know this, right? Our corporate accounts with Square, our transactions for the most part are with Stripe, and PayPal is our legacy merchant because we have still things processing through PayPal. So we use it. It's our least favorite. That being said, it was the first to market. So PayPal, a lot of Latin America, a lot of third world, they have a really strong market share on those countries. That being said, if you were a JP Morgan or if you were a Citibank and you need to get into financial tech, it would behoove you to step in and purchase a PayPal. Now, I'm not saying PayPal is going to get bought out, but I will say to you that if I was a big bank, I would be looking very carefully at the price of PayPal and say, where can I get in? You know why? Because if I was a big bank, I would say, this stock was just 310, what? Less than a year ago, 6 months ago? I could get it at 160, and I could go ahead and acquire all of their customers, all of their data, all of their deposits. I could go ahead and enter this financial tech that I know nothing about. I could buy a successful infrastructure rather than have to make it myself. If I was JP Morgan, I would buy PayPal with my eyes closed right now. That being said, I do believe PayPal is starting to offer an opportunity where I do not believe it's really going to go much lower. Because if I was an editor, I would share that message with people and say, hey guys, it's starting to get to a point. That being said, on a daily chart, let's see where it is, right? What number am I at? Why is this taking me so long? So I know the secret of how to okay, so we're at 7 red and green. Okay. Now PayPal is something you want to look at a little bit longer. Let's take a look at it on a weekly. On a weekly, it was at 13 red and green, popped up. It's since come back down. On a weekly, it's 13 no red, but it is green. If I was forced to make a decision, I would not own it. But if I did own it, it wouldn't be the first thing I was looking to sell. I mean, I would leave it alone. What's the market cap? Oh, almost 200 billion. You would have to do a little homework, see what their deposits are, see how many customers they have. But a company like PayPal is very, very valuable to a very large company. And when you have an environment where growth is hard to come by, but money is abundant, and you're a bank, you want to take that money and purchase growth. And especially if you're a bank and you're seeing that there's a new industry, it's financial technology, it's all the millennials doing their transactions online. You do not want to be the horse and buggy, right? Like you don't want to go to business to the Model T car. You want to go ahead and evolve. Therefore, if you're a large bank, you want to buy a PayPal. So I would stake my reputation that over the course of the next year, somebody will buy PayPal. Is that worth owning it? Well, I don't think you ever buy anything because you believe it might get bought out, right? That is something that's a reason to hold it, but that's not a reason to buy it. So since you already own it, I would say stick with it. But if I was looking for something to buy, which I did today, this wouldn't be it, which it wasn't, right? Gotta go, Mike. I'll catch you later, buddy. Deborah, what about after payday that charges no interest? Afterpay, is that a stock? Afterpay Limited. You look at an Australian stock because OTC. Is this an over-the-counter stock? So I know nothing about this company, but I can tell you that it's only a 6 red and green, so I wouldn't pay much attention to it. That charges Afterpay. That charges. So a lot of these companies like that, these are their gimmicks, right? We want to get you in and we won't charge you interest. And the belief is kind of like Robinhood, that once they have the customers, kind of like what Rhino's doing, once you have the population, the value of the population is worth more than any individual in the population could give you. For instance, Robinhood's getting beat up every day, but they have like 25 million millennials. And you know what's, and I was saying this to my wife this morning, by the largest wealth transfer ever in the history of the United States, or in the history of the world really, will be happening in 2030. The baby boomers own 70% of the wealth of this nation, of the world. By 2030, the majority of them, by demographics, would start passing away, which means that inheritance is going to go to the millennial generation, which means these millennials that you think are complete buffoons that are living in their parents' basements right now, by default are going to become the wealthiest generation ever. Okay. Fast forward to Robinhood. Robinhood has 25 million of these accounts. If one can say, if Robinhood is still around in 2030, and if those customers stay on Robinhood, the account value that they're going to have is naturally now going to make Robinhood the biggest brokerage platform in the history of the world. Robinhood today is $13. What is the largest brokerage platform in the history of the world worth in 7 years? I don't know. But that's what people would invest in Robinhood for. Same thing with Afterpay. So if I was looking at something like Afterpay, I would look at something that's closer to that goal, which is a Robinhood. And I keep talking about Robinhood because I'm kind of like getting interested in it. It was backed by Goldman Sachs and all the big guys. It's becoming interesting to me. So I'm going to put it on the list. And again, we buy one or two things. Oh, look at Apple up $1. We buy one or two things. Where's Netflix? 385, come back, 386. The video of Microsoft is now up. Tesla was down 32. It's now down only 13. Whew. Let's see where our Apple position is. It's probably up a lot right now. We're already up 2,200 on Apple. We're up about 20% on our stock. Meaning I could sell right now at 20%. Right? Do I want to? I still got earnings next week. I have a market that's going up right now. Right? I think we capitulated today. Let's take a look at the Nasdaq. Look at that bar. Let's take a 5-minute approach. Come on. All right. Here's where the market opened. Each bar is 5 minutes. Whoa, whoa, whoa. Oh my God. But let's take a look at something, right? I want to show you something. See the price going down? What's the volume doing? It's going down. There's less sellers. See the price going sideways? What's the volume doing? It's going up. See the price going up? What's the volume doing? It's going up. What does that tell you? When you see less people selling the stock and more people buying it, for the very least, for the near term, you're where you want to be. So unfortunately, I looked at Apple, and that drives me nuts because I didn't want to look at it, because now I'm sitting here like, should I just take the 20%, right? But I think we're going to get 40% by the end of the day. And that's an automatic thing. It's going to go to my watch, right? Hands off. But let me go ahead. Let me get running. I need to go ahead and post this into our group. I need to put up the replay. It'll be on the YouTube channel, blah, blah, blah. And let's just see where the day goes, because I do have some stuff I have to do as well. Red and green, what do those signify? So the red, in the most basic terms, signifies coiled spring. Like it's really, really getting to a point that anything is going to make it pop. Green signifies that money's coming into it. So you can have a coiled spring for a stock that goes from 10 to 0. The coiled spring is just simply the velocity of velocity in its trend change. You can have a high velocity of trend change with a stock that's going to 0, right? It's just going to 0. Conversely, but actually not conversely, but the green allows us to see if money's coming in or if money's fleeing. So you can have a red and no green, and that's stay away. That thing's going to 0. Red and green means, okay, it's getting there, it's getting there, it's getting there. Okay, we're going to leave it there. I believe Wall Street is going to be quite happy today. And if our stock gets sold at 40%, we'll tell everyone. And for those that purchased like we did and went ahead and set up the alerts, I hope you have a very good day as well. Well, I hope everyone has a good day, but that's what we're doing. All right, that's it. I'm 6 minutes early, but Anthony has a lot to do. I'm going to send out the email now to join V at 12 o'clock. She's going to highlight the partner platform of Rhino, which if you like Rhino Wealth and you want to be a part owner and a partner in the Rhino ecosystem, you're going to want to be on that call. I'll send you the email now. All right, everyone. Love you. Peace and love. Peace, peace, peace. All right, guys, I'm going to put it up on the YouTube now. I love everyone. Bye.